Okay, so welcome to this hangout with Web Summit this afternoon. Thank you for joining us this unusually sunny day here in Dublin. My name is Sarah and I direct the forum here at Web Summit, and today we're talking all things investment. So sweet spots, silver bullets, and all the do's and don'ts before all of our startups join us in Lisbon this November. So who better to have that conversation with than an investor? So here to share the tricks of the trade around approaching investors come November is the lovely Bedy Yang, who is managing partner at 500 Startups, which is a leading seed and incubator fund in Silicon Valley. And Bedy herself has invested in over 50 startups, not only in Brazil and Spanish-speaking countries, but also in Russia and Kenya. So thanks so much for joining us this afternoon.
It's a pleasure.
So I guess to kick off the conversation, Lisbon is fast approaching. We're just about 10 weeks out, and we've lots of different startups joining us from Alpha, Beta, Start. And I'm sure a lot of them are at home now doing their research and their homework. So I guess the first question that I would have for you is, what should a startup be doing now in the lead up to the Web Summit to help them secure investment and maximize their experience?
So we have a couple of months until November. One important thing is start doing the research on which investor is going to be there, what type of investment thesis they have, what type of deals they like, because that's extremely important, because you want to be talking to the right audience with your product. So tons of research, and if possible, a warm intro to them before they head to the event.
Okay, so in terms of, once startups know their product and do that bit of research around that, there's a lot of kind of hype in the startup community and ecosystem about what the perfect pitch is. What is an ideal elevator pitch, and is it depend on product or personality in person, or some sort of sweet spot in the middle of those things? So in your experience, what makes a good pitch? And if you don't mind, could you tell us about maybe one of the best pitches that you've ever seen?
Yeah. So when you think about like an event, it's more than an event, it's actually an experience, right? So you might have opportunity to talk to someone a couple minutes, or maybe you're able to schedule like an hour sort of conversation. So I would separate those two, because I think your opportunity to present yourself and allow them to get to know you is different. So let's say you're meeting in the booth, in the corridor, in a very specific context after someone talks, and you approach them, you basically have that really 30 seconds, what you're talking about, which is the elevator pitch. For your goal there should be, can I get the next meeting? So that's your sole goal. Like, they won't do anything else. They will only have an impression to say, is this going to be a waste of my time or not? Okay. So I would say, and very often, like answering more directly on how do you engage that conversation, is because you don't have a lot of time, try not to explain too much. Like, a lot of investors, they've seen a lot of deals, they've seen a lot of pitch, so they probably already heard of some sort of version what you're doing. I tend to try to lead with attraction, with a number that is differentiated for you. It's always starting with a general differentiation, but there's so many ways to work around that. In our case, we tend to really like the numbers. You don't have to have like, oh, I have 10 million users. You can see, oh, in like a short period of time, this is what we accomplished, right? And all of a sudden, I'm like, oh, I'm paying attention, because if you accomplish it in this short period of time, imagine what you can do in the longer version. But your goal in that like elevator pitch is to get to next meeting.
Okay.
So answering your other question, to say like, oh, what's like an example, or just be more specific about like what is a really good pitch?
Yeah.
I think I can talk about more on the sort of longer version, right? In the short version, you want to talk about, people need to understand your name, because very often you have a lot of foreigners coming, and then people are like, what? Oh, I'm not sure if I understand your English. So first, like, just make sure sometimes, especially international founders, it's very hard. So introduce yourself. That's introducing you as a founder. And then they need to really like understand what your product is. And then, so if you have 30 seconds, that's it. And my suggestion also for the preparation until you go, do it a lot. The more you do it, you're gonna get better. And then you ask your counterpart, maybe it's another founder, your coworker, you can ask like, is it clear, like what I'm telling you, right? And is it compelling? Is that gonna make you excited? And the more specific you are, the better, right? If you say, I have the best app, it means nothing. I have 100K download in 2 weeks. Oh, let me check what it is. So also on the examples, like so you're asking me about like be specific or give me an example. I think that's the same sort of situation when you're meeting in the elevator pitch. When you do the longer version, there are a few things you also want to hit, right? Like definitely they want to have like what I normally really like to hear from founders is what's their insight and understanding of the customer they are serving, right? It's very rare it's going to be a complete new business or a business model, but they have a very unique way to approach that customer that might be paying or will be paying in the future. So understanding your consumer really well, like, and then the channel on how you reach that. And then I like to see a little bit more about the product and the team. But I would say focus more. Traction is always like will speak by itself, and then know like your customer really well, and then from that know how you're going to reach them at more scalability, and that's through which channels. And then ultimately, we are early stage seed fund, so what we really like is the team, but it's very tough to really get to know you in an hour and half an hour. So it's really on how you react to questions. Have you really thought through some of the challenges? Are you honest about what's gonna break or what's some of the breakthrough you have to do? So those are like the key things that is on the sort of subtle side on the pitch.
Yeah, that's just in terms of you mentioning the kind of like longer pitch when you get an opportunity to actually have a full-on conversation with somebody. I know over the years you've been involved in lots and lots of different startups, and I think one of the things that's so great about 5 startups is the amount of diversity in your portfolio. And if I'm not wrong, you have 30% of your companies have a female, which is fantastic. But were there any particularly memorable experiences of your first meetup with startups, and how did those people go about, I guess, answering the questions that you said are so important to answer and cutting through that noise to make themselves so memorable and pique your interest?
Yeah, very often it's on the harder questions, which are like a lot of people show about like competitors, right? But your view about how you're going to break through the market. So be specific. For instance, if you're working on a marketplace, for instance, because it depends on very often what type of business they're working. So the questions might be sort of specific, right? So if we dive a little bit deeper on, let's say if it's a marketplace, I want you to have an insight that if you are building a business model that will work in the marketplace, there are a lot of questions that are specific to marketplace, right? Normally it's two-sided. Which side do you think you have more traction when you start offering the product? What do you think is the liquidity? How do you really think about the transaction? Would people go around and sort of work directly with the supplier once you connect them for the first time? So there are a lot of questions within marketplace that you as a founder or founders should know a lot better than me. Like I have like some very general questions about the business model and how maybe some other competitors might work, but you should always have better, at least you have to have thought through that process. I think maybe answering a little bit on the diversity, I don't see so much from gender. I think maybe a little bit. I think partially when you talk about pitch, it's a sales. So maybe more aggressive people or a more aggressive profile might do a little bit better on engaging the funding. I think it's true. I wouldn't say there is a gender or there is a nationality component. Okay. I think it's more like finding that authentic voice. And we do a lot of pitch prep, like preparing companies to talk to investors, especially if it's on an audience on a demo day. And having like a group of good coach on how you deliver that message. And of course, your coach wants to understand how the investor thinks. That's why like we do a lot of pitch prep, because we know what we might be looking for, right? Yeah. It's just like fine tuning that sort of messaging. It's just really important, because very often you might say something, but the other side might not understand what the real opportunity is, right? So by crafting some stories, it's ultimately an early stage about stories, right? Like crafting some stories and sort of checking what it might work. I think that's sort of very important. Another component, I think, since we're talking about everything about fundraising, and I think founders always want to know a little more like results. I think also on the strategy on your fundraising, I would say craft your story and then make sure all the key components are there. But also you want to have a really good process and be diligent about building a really good database of potential investors, and then be strategic about which investors might be the first one and which investor might be the followers. Because if you know who are the first investors, that very first believer very often is the hardest, right? So you know how to like find that believer, because they believe in you, believe in your team, believe in your vision. Then it's a lot easier, because you can say, oh, I'm raising, let's say 500K, but I already have half the round. So like that very beginning on have a very good list, strategize on how and which investors you should first like target. There are a few ways to do that, right? You want to target very often, you want to practice with unlikely investor, that's one way to do it. Or you want to make sure like those that are likely, you start circling them, and don't leave it open-ended. Like ask them, like, can I count you in? Like you feel like they're excited, like add them, and they say, yes, of course, I'm interested, or yes, you can count me in. Add them on like angel list that they're your investor. It's a lot harder for them to back out, even if the documents are not signed, right? Yeah. So I think those are some of the things that founders should do in addition to their pitch, to try to think about how to sort of close investors.
And just on the flip side of that, from giving all the wonderful advice of what people should do, I think one of the golden nuggets of information that people definitely want to know today is there anything that founders definitely shouldn't do when they're approaching an investor? What gets you the most?
Yeah, I think like what turns me off completely is like stop this conversation. I guess people who are very like out of this world. Like I respect that information, it's not the same around the world, but I feel like if you are here, if you're coming to Web Summit, like try to get a little basic information about the dynamic of the events, when to approach people. So I think some people just like, it's really off because they don't understand which stage investor you're in, which is probably fine. But then at the same time, if you ask them like, because it becomes really specific as you're doing investment, like what's your cost of acquisition, right? What's your CAC? And then they have no idea. What's your lifetime value? They have like no idea. And then they say, oh, everything that I have right now, it's organic.
Okay, vague. Okay, yeah.
Vague. I'm like, you are not telling me that you are like, if it's organic, then anyone can do it, right? And then they'll say, this is the best. I have heard them say, this is like a mix between Facebook with Uber. I'm like, what does that mean? what should I even think about what your service is, right? Yeah. So I would say almost from the extreme, really hard, because I think one thing that founders should always think about is that it's an engagement between two parts, and making people's time like valuable from both sides. Like I think sometimes investors also waste founders' time, and I think it's really like both sides of the table that is really important. That's the same thing for founders. Like don't waste investor time. Like do some like research, but even about your business, right?
So I guess just avoid any sort of hollow confidence, borderline arrogance, and pick your time a little bit better. And I think you mentioned just before there, just along the lines of aggressive personalities and certain personality traits that founders or people involved in startups may have that could stand to benefit them. And would you say that, I guess, that aggressive and go-getting mindset is the most important personality trait in terms of startup success and approaching investors? Or is there something else that's less tangible that you can't necessarily put your finger on? Or what do you think along those lines?
I think if you have a good product, it's going to be a lot easier for you to raise money.
Okay.
So focus always on what your it's looking for. I think the question maybe is, good founder with good idea, with good market, they would very likely raise the money, right? Like maybe good founder with bad idea, like what are some of the traits that will make the difference? I would say, I think having that personality that it's very sort of forward, I think it helps because it opens a lot of point of contact. But I think the closing is extremely important. So the follow through, like if I tell, like let's say we have a conversation and I say, okay, so I know you don't have like the details about this number, send me after, right?
Yeah.
And then maybe like a week after I get that information, I'm like, okay, I think there's a gap on my sort of interaction with you, right? And I say, oh, send me the terms, but maybe you're trying to close the term, but it's so open-ended. It is complicated to raise money if we're doing it for the first time. And then you never come into what the term is, and then you're completely lost, and then you never sort of reach back to us to like tell us what it is. I feel like but closing is what matters. So having a very clear process on how you want, that's why I say like have a spreadsheet or use, some people use Trello, other people use specific sort of CRM to manage your investor list. Think that as a sales process, right? Like it's the same as managing like clients and understand what they're looking for, and then sometimes be a little bit insistent on follow through, and then just have investor to say no if it's a no.
So in terms of, say, for example, we have a startup that has a successful interaction with an investor in Lisbon. What is the timeline and when is the best that founder or someone involved in that startup to actually follow up and capitalize on that relationship and try and convert it into something really meaningful?
As soon as possible.
If
possible, ask them if they have a check. Like we were joking one of our LP meeting because I also raised money. I like walk out, I was like, I have a check, a small one, it's right here.
Okay, so immediate closing is the name of the game. And just in terms of something that you mentioned as well, like I guess persistence is the name of the game in the startup ecosystem as well. It's not only something that we see in terms of people building companies that rise and fall and rise again, but I suppose it also frames the interactions that people have within it. So how persistent is too persistent, and is there such a thing?
Yes, there's sometimes people who is a little bit too much. I think everyone's limit is different. I would think of, I would go back to when you're not wasting someone's time, right? So persistent might be, hey, did you, one persistency is like, oh, I just want to make sure you stop this email. I want to count you in or not on my round, and my round is closing this day. Creating that urgency is very important, right? I don't reply, send a note and say, hey, I want to just check if you send the email. And I don't think that's annoying to me because it's maybe I'm just too busy to respond.
Okay.
But what's happening very often is if I say no, then you find another 3 ways, and then I say no, then you find another 3 ways, and then you kept on sort of coming back with like, especially some founders, I feel like they're the real serial entrepreneur, except without the exit, right? So every time they come up with a new idea, it's like, okay, this time I have a new one, and then I feel like they lose the credibility. So think about that. I think the few things about persistency is, I think it's a really good thing. I think being like resilient, even, it's like a word that will sort of embrace really well. And what is the limit? I would say, think about respecting people's time.
Yeah.
Sort of one component. And it's always an exchange. Like we learn so much. I think like when I'm thinking about founders, we learn so much with founders, right? So every interaction is valuable for both parts. Like, you are not like, if you're a great company, you're giving us a favor to let us invest in you. So I think just thinking sort of more on the higher level, like, is this a good use of the time of the other person? And then be respectful on that end.
Absolutely. And I know we're running out of time now and this conversation's gone super quick, but one final question, and I guess you mentioned it again before when you were talking about it being super important for startups to map the lay of the land with investors. But I guess it's also important for startups to get the lay of the land with what else is happening in the startup community outside their particular bubble. So coming back to Lisbon now, so are there any particular tech trends that you're looking forward to or looking out for come this November?
Yeah. So for 500, just for the context, is we are one of the most active investors in the world, and we actually are very agnostic about bubble, no bubble. Like, it's just by amount of companies that we see, and we see that from batch to batch, because we also have accelerator program that's easier to measure sort of companies that comes in, right? I think it's almost like a reaction of founders. Like, now a lot of founders like to have like AI or bots. All of a sudden we have more companies around that. Like, I think in the past there were a lot of companies around Bitcoin like a year ago. So we see more as a reaction than to say, we think this is going to change. What we think as a trend, where like if you think about like, oh, what did Bedy said that it's relevant that I can pitch, is that we think we look at it a lot around industry, right? So financial service, like real estate, we think like it's a very like important area where technology, or all sort of technology you can think of, could you like change agriculture, agribusiness. So we start segmenting. That's how we're trending our sort of programs. We don't trend on like, oh, this has a Bitcoin track internally, so we're looking at the company's Bitcoin. We normally think about like, this is fintech track, this is like healthcare. We sometimes think about like software as service, because business model also has a very important component. But we're very sort of industry revenue sort of oriented. We think like internet is going to sort of disrupt a lot of the dinosaurs and the traditional industry. Definitely. So if you come from that approach, and that's a more high likelihood than to say, oh, we are this AI company with Internet of Things but it's very easy for you to measure. Like, if you go to CB Insight, or if you go to like AngelList, you see the average valuation. The average valuation might be higher because there are more investors. So you should do your research, but you shouldn't build your company around what's hot and what's not. At least that's what I think.
No, absolutely. And I think nobody knows better than you. So I guess we're going to have to finish up there, but thank you so much for your time this afternoon. I think you've given everybody some fantastic food for thought for Lisbon. So I guess from me and from all here in Web Summit HQ in Dublin, thanks a million for tuning in, and we hope to see you in November.
Yes, see you.
Thank you. Bye-bye.
Bye.